Steve Kaplan, QuickBooks Video 1, How to Allocate Income to Partners at Month End. Be aware that this is an example of a very general service business, just to get the idea of how it would be done. Also keep in mind, this is a topic that is usually covered in chapters 4, 5, or 6 in a semester 1 accounting class. Accounting 101 might be covered in chapter 3, but basically it takes the accumulated net income and distributes it to each partner's equity. Let us imagine that this is the income statement or the profit and loss statement for a service company involving rocks and scissors. All right, no paper. But let's imagine that they have been operating for the full month of October. And let us imagine that these are the accumulated income amounts for each different service that they did work and earned, and therefore their total income is $7,000. And let us imagine that these are the individual accumulated expense amounts for all of the services that they used and expenses that they incurred or acquired for the month of October. Thereby, the net income is $4,900. Now, let us imagine that Steve is one partner and Joe is another. And let us also imagine that they have a partnership agreement where they share the profit. In this example, we will imagine that they share the profit 50-50. This means of the $4,900 total net income, $2,450 should be allocated to Steve's equity account, and $2,450 should be allocated to Joe's equity account. Looking at the profit and loss is helpful because it does tell us the total income, not just the individual income items. It does tell us the total expenses, not just the individual expenses. However, when performing this operation or this procedure, it is more helpful to look at these numbers listed on the trial balance instead of having them listed on the income statement. Okay? Now here's our good friend the trial balance, and they're basically the same numbers. Here are the two income accounts, but they're not totaled, but we know that's $7,000. Here are the same numbers as the expenses, but of course we remember they were $2,100. And let me say it is a total coincidence that the current cash in the bank is equal to the amount in the other statement that showed net income $4,900. Now remember, we're not physically issuing the cash or withdrawing the cash or distributing the cash to the partners. We're just allocating the income from the previous report. The net income $4,900 is a theoretical number that we allocate. We don't physically distribute this $4,900 cash. But it's better to look at it at the trial balance because that reminds you that income accounts normally have a credit balance, so we have to debit them to wipe them out and make them zero to close them properly. Expense accounts normally have a debit balance, so we have to credit them to wipe them out and make them zero. And the difference, which is the $4,900 net income, gets allocated to the partners in the process. Now, the trial balance does not show every account in the chart of accounts. It only shows accounts that have balances or that had transactions in them previously. But if I show you the chart of accounts, and I'm sorry that I don't think I can make the letters big, but if I show you the chart of accounts, you can see that we have the accounts that are listed in the trial balance as the income and the expense accounts, and we have the cash and Citibank, but we also have this equity account here called income summary. Okay? And that's going to be what we call our clearing account. That's going to be the account that we put everything through in order to properly distribute the $4,900 net income, some of which will go to Joe's investment and some of which will go to Steve's investment. And if you'll notice, right now Joe's investment is zero, and that's why it was not on the trial balance. And if you notice, Steve's investment is zero, and that's why that did not show up on the trial balance. But of course, after we make the adjustment, it will show up. Now again, try to remember what these numbers are, and try to remember the total income is $7,000, the total expenses are $2,100 from the profit and loss, and try to remember them as we make the journal entry. We click Company, Make General Journal Entry, and our good friend, the journal entry window, opens up. Notice it's got to be done on the last day of the month. And again, we want to make the account 0. So I happen to remember that the rock cleaning service had a credit balance of $6,000, so I'm going to make a debit of $6,000 to wipe it out. I remember that the scissor cleaning service income account had a credit balance of $1,000, so I have to make a debit balance of $1,000 to wipe it out. And the balancing $7,000 goes to our good friend, the clearing account in this case, income summary. And I can actually leave that on top as I clear the expenses. So I happen to remember that the expenses, delivery expense was $500. So I'm going to choose delivery expense, and I'm going to put a credit of $500 because that was the debit balance. Okay, I happen to know that electric expense was $300 as a debit balance, so I want to choose electric expense as a credit of $300 in order to make that account go down to 0. Okay, just don't worry about how the computer changes the number. Supplies expense was $900 debit, so I want to make supplies expense $900 credit. Okay, and the last one was telephone for $400. So now the computer knows that there is a $2,100 imbalance. And if you remember, the $2,100 was the total expenses that was listed on the income statement before. And what account balances everything out? Our good friend, income summary. So this would be the first set of adjusting entries that we would make to clear out the income accounts, to clear out the expense accounts, and to bring the difference, which is the net income of $4,900, that goes over to income summary. Save and close. Now take a look. All of the income accounts are 0, all of the expense accounts are 0, and the net income of $4,900 is here in income summary. Now, as per the partnership agreement, the net income should be distributed to the two partners 50-50. So Joe's investment should have $2,450 in it, and Steve's investment should have $2,450 in it, but income summary should be 0 when you're done with this process. Company, make general journal entry, and it's very simple. Income summary is a credit of $4,900, so we have to debit income summary to make it 0. Okay, Steve's investment gets his share of the net income, which is half, and then the computer knows the balancing half is the amount remaining to balance the debit and credit, and then it goes down here to Joe's investment, and that's how you distribute the income. And when I click Save and Close, Steve's investment and Joe's investment will be showing up on the trial balance for these amounts, and income summary will be 0. And there you go. So now, whatever the net income was during October, the net income was $4,900, but you can see Joe has a 50% claim on that, and Steve has a 50% claim on that.